Hey guys, this is John. Welcome to the free video, and obviously an interesting day to the upside. So the question here is, first of all, why did we get a decent rally today? And secondly, is this something that we're going to see? Is the bottom in, and are we just going to explode higher now? I came into the weekend some light positions on the bearish side, like some call credit spreads on Goldman Sachs and things like that. And anything bearish took a little bit of heat today, unless it was a bearish position on a stock like Netflix, which just continues to fall day after day after day. So what am I looking at here? Well, first of all, keep in mind, from a weekly perspective, there's pretty much zero bullishness unless and until we get a weekly close above this candle. So at this point, we're just kind of, push. We could conceivably test 201 intra-week and then roll back over. And that would actually be a normal kind of a bear market kind of an attribute. The fact that we closed above the 8 EMA, it does automatically open up the door to the 21 EMA. Okay, so that's just kind of the herding cattle kind of a thing. So then the question becomes, well, all right, well, how overbought or oversold is this market? And if you are a student of the trend, then you'll see that today, the bulls kind of shot their wad. We closed at 0.41. And how this works is, if you don't know, is that essentially, most of the time we're between, 1 and 1.50. That's kind of a normal area. If you get too extreme here we closed at 3. It's an extreme oversold situation, and then you kind of look for a snapback higher. But what happens if you get too low? Well, if you look at the last time this happened, what happened was the next day we just kind of traded sideways, then slightly down, and then we tanked. The last time that happened here, we were down a little bit the next day, down a little bit, got a little bit of a recovery, and then tanked. Here, we got a little bit of consolidation, but ultimately just couldn't go higher. So the main takeaway from the very low trend reading is that if all the bullets have been fired, based on this, it'll be difficult for the markets to really do a lot to the upside the rest of the week. Now, of course, that may not be true. The market just may rally like crazy the rest of the week. What I'm looking at are things that have measured this stuff pretty good. The other thing to keep in mind is that the skew is nearing the highest levels since October or September of 2014. This just shows institutional investors are loading up on puts for protection, and they're usually right. So here this happened, and you can see that from here we traded sideways for a little bit and then ultimately tanked. Okay, even over 1.35 is a flag. Here we got a little bit of a tank. Here we got a little bit of a tank. Here, a little bit of a tank. So to me, this market may keep going higher, but I cannot sleep well at night being super long in this market. But I don't want to get run over by a freight train either. So this is just one of those markets where at this moment in time, I think it's better to have some small exposure on both sides of the market. So on the spiders, we're rallying to resistance. Great, let's buy puts on the spiders. If we want to be long something that's like this. Buffalo Wild Wings, I can't even believe this stock. This stock here has got a daily squeeze that's about to fire. We're making new highs on volume. This is the kind of stock that just kind of keeps on going, because a couple of things here. First of all, it's a very bullish pattern, but secondly, when a stock like this has been able to shake off the negative news of the market, typically what happens is retail likes the long side, right? So they're going to look for the stocks that are doing well and pile into a stock like that, which means you have more money chasing fewer stocks. Compare this to Netflix. People are fleeing Netflix here. It's been down like 7 sessions in a row, give or take. And this is just kind of ugly. It doesn't mean it's the end of the line for Netflix, but this thing got a little lofty, and it's just due for some selling here. All right. Okay, so just a reminder too, I'm going to be doing a free webinar Wednesday, simpleroptions.com/growth, and it's really just talking about this kind of a market. It's been a great year for trading. But it's been one of those years where the more experience you have, the better you're able to do. If you've been trading less than 6 or 7 years, it's been tough in terms of being able to adapt. But if you've been trading for longer than that, this has been like, wow, this is amazing. And I really just want to focus on a webinar on in this kind of a market specifically, what are the kind of things that we want to do? Because if we do everything that's super safe and don't take any chances, we're not going to make any money when these are the best opportunities to take money. But how do we take chances and not ruin our account? All right, so we're going to talk about creating consistent profits, whether the markets are trading up, down, or sideways, okay? And specifically, whether they're really volatile and unpredictable or they're boring. How to keep your risk small when the markets seem completely unpredictable, but leave the opportunity open for a decent trade and even a big trade. Easy ways to establish trades for extra income part-time, even if you work full-time. I mean, these kind of markets are great for that. And on and on. I just want to look, these are the things that work in this kind of market. Plus, if this market rolls over and goes into a full-on bear market, what are you going to do in that situation? Or what if we just go sideways? What are you going to do in that situation? And you've got to have your go-to setups for every situation, and that's what we're going to talk about. All right? September 9th, that is Wednesday, 8 o'clock East Coast time. First name, email, hit register now, and then you will get information for this free webinar, and we'll see you then.